I'm your moderator for the panel. My name's Angela Yore. I'm the co-founder of a communications consultancy in fintech called SkyParlour. And also, I'm the UK ambassador for the European Women in Payments Network. And the European Women in Payments Network is all about getting more women on the speaker panels in leadership positions, and hence the reason I'm here to moderate today. We want it to be as lively and thought-provoking as possible. We want to have some meaningful outcomes as well to our discussion. And we want to gauge the temperature. So we'll be looking at the questions. Hopefully, there'll be some questions via Twitter. If there isn't questions, I'll be looking for hands up and volunteers, because this is an opportunity to talk to some fantastic people here with a lot of knowledge, and we want it's a good opportunity to use it. So I'll just read out what our panel is about, and then I'll start to sort of start the discussion. So in line with the global audience and perspective of FinTech Week, this panel will take in a discussion on how the international community is engaging with new forms of payments and digital technology, with a focus on how FinTech competes with traditional financial methods. And what we do know about payments and FinTech is that, digital payments volumes are growing, and they're predicted to increase by 10.9% through to 2020. So that's 726 billion transactions, and that's via a report from Capgemini. And as I say, this particular group of people we've had one dropout, so only one resignation, which also Theresa May's only had one, so I think we've done quite well there. Is really just some heavyweights here. So I'd like you to introduce yourselves. I'd like you to say a little bit about you, a bit about your companies, and what you're doing in your businesses in moving money internationally as well. So, if we start with you, Jeremy.
Hi, I'm Jeremy Thomson-Cook. I'm the Chief Economist at World First. We are a international payments and bank account provider for businesses, B2B payments, and also marketplace e-commerce traders. We started in 2004 in the financial capital of South London, that is Stockwell, with 3 people in a basement, and we're now 650 people globally over the course of 9 offices. We moved £20 billion worth of currency last year, and we're hoping to continue that this year.
And just one thing, how are you collaborating with traditional banks to benefit international markets?
I don't think it's any secret in the international payments world that as much as we can talk about disrupting the marketplace, there has to be a link between banks and payments providers and international payments companies to use the banks. They are our liquidity providers for our currency transactions. When we're opening bank accounts for people in Canada or in the Eurozone or in the United States, for them to be able to transact cross-borderly, it's with a corresponding bank over there. So it's a relationship that is as much brother and sister as it is mum and dad.
Fabulous. Valli?
My name is Valli Ardalan. I look after strategic alliances for Earthport. We manage international payments in a hub and spoke model as a kind of alternative to the correspondent banking network, and allow our clients through a single interaction or a single integration with us to access local payment infrastructure in over 85 odd countries. I would kind of second what Jeremy said, in that, we certainly don't see ourselves as disruptive, as more as engaged and working with banks, PSPs, money transfer organizations, and corporates to facilitate those moves across the world.
Thank you. Kush?
Yes, my name is Kush Patel. I'm the CEO and founder of Tallysticks. Unlike my 2 colleagues over here, we're not a payment system. We're actually a traditional fintech company. So we help companies manage their international trades. Their importers, exporters come together, negotiate a transaction. Along with that transaction is payments. And because of that, we've worked a lot, including with my 2 colleagues here, in terms of how to develop an international payments platform that makes it easy for people to onboard, to mitigate or not circumvent, but actually comply with regulation in a very seamless way. Very shortly, I would say that it's been very difficult to actually accomplish our tasks. But that said, my goal is here to sort of tell you some of the challenges that fintechs like ourselves have with the current payment and regulatory framework.
Thank you. So payments and the movement of money is a very innovative, disruptive and forward-thinking space. But moving money internationally is like the Achilles heel and hasn't really kept pace with the digitization of life that we see everywhere else. Question to you, Jeremy. What do you think are the main reasons for that?
When we started out to try and take a little bit of the international payments pie, going into the big kid's schoolyard and trying to make a bit of a noise and steal some of his sweets. And the bag of sweets continues to get bigger, and unfortunately the bully has got bigger as well. So, if I can continue that analogy. So, the one thing as an economist that I've always looked at is the changes in business and consumer profiles post the global financial crisis of 2008, which obviously caused a huge amount of trust issues with the financial system as it stood at that time. And obviously a lot of fintech companies and disruptive companies were born of that crisis to try and make sure that A, it didn't happen again, but B, also to sweep up the debris of that crisis. So we've seen customers remain with those banks, even after Occupy London, Occupy New York, and all the fines that we've seen against some of the global banks out there, that businesses have stayed with those banks purely because they still think they are more secure, maybe, than international payments providers. Regulation is also something as well. It's probably the most over-regulated sector within financial technology at the moment. So,
great. Valli?
Yeah, I'd agree with most of that. I think probably the biggest challenges or some of the biggest reasons that we think that it's not kept to date has been also around a lack of need, really. The incumbent has had, clear ownership of the space and hasn't really needed to take on the extraordinary task of kind of re-teching themselves and rebuilding their infrastructure. So they didn't really have the drivers until, potentially now, where it's become significantly more problematic. But even in that, I think in the last year, 2 years, the conversation's gone from disruption to collaboration. And, to Jeremy's point, the bully has got bigger. I don't know if it's even seen as a bully anymore. It owns the customer, and it is a requirement to interact with, I think.
Thank you.
Yeah, so look, one of the things that we see when it comes to sort of working with customers, right, is, they have to do, for them to actually work with either a payment service provider like my colleagues, or via a sort of a portal like Tallysticks, what you see is that the regulation is the same. So yes, that bully hasn't changed. Irrespective, people used to be able to hide before, right? They could, if they couldn't go directly to the bank and get a service, they could go somewhere else who had less regulation, less sort of stringent policies and service themselves, right? That hasn't, now what's happened since 2008 is it's becoming a level playing field, right? So what you see is that it's, no matter where you get this service from, you have to do the same exact thing. But the cost hasn't changed to any one of your service providers, right? So, and that cost is being borne by you as the user. Now, one of the challenges that that takes me back is the fact that the regulator, rather than being forward-thinking, right, and saying, what will the landscape look like in 5 or 10 years, they've actually gone and said, what does the landscape look like today, and what kind of regulatory environment do I need as a result of that, right? That doesn't solve a problem. I mean, one of the examples that I've given is PayPal came about, I think it was 2000, in the eBay days, so that was 1998. That should have been the wake-up call to the regulator to say, look, local or international payments are going to be a thing of the future. How are we going to support this industry going forward? It took them another decade to actually come to the realization of what was required 10 years prior, almost, right? So today, if there are any regulators in the audience, I would say, rather than thinking about what the landscape looks like today, why not think about what the landscape is going to look like in 5 or 10 years, right? Make it easier. Rather than being this big, cumbersome challenge, why not make it easier for companies or for users or customers to actually work with payment service providers, with applications like us, rather than going through these very stringent, very orthodox sort of policies, right?
Is there any regulators in the room at all? If there is, can we have a show of hands? If there isn't, then we'll have to make sure that next time we get a representation from the regulators. Can't see any, so there you go. So I guess there is some great things, even though, international payments has been slower than local payments in terms, there's still huge amounts of innovation out there that we can all learn from different geographies. So, what trends are you seeing in international payments and the movement of money that, are future gazing, that, you think are worth keeping an eye on, that you think it's worth us all, sort of noting and watching in the next couple of years? Yeah, Valli, yeah.
I mean, I think it's a less kind of obvious answer to that question. And I would suggest that the reason being that in the local economies that you operate in, there is some innovation around peer-to-peer, around mobile payments, around financial inclusion. However, the rails that are in place to connect those countries are still based on primarily SWIFT and the banking infrastructure, which kind of, removes the international part of that innovation. Where I think there's going to be a lot of movement will be in about a kind of translation, if you will, in terms of having an agnostic view, being able to ensure that when you move money from one place to the other, that you're tapped into whatever those local innovations are, that your distribution networks are strong and enable you to do that. I think, the problems that we've been trying to solve in international payments have all focused on the messaging part of that money movement, which is a relatively small part of the pain point. And there's been some significant movement in that area. But, to my colleagues, repeated points, the problems that we seem to face are primarily around the regulatory and compliance requirements of getting into the countries that you want to operate in, managing your Nostro accounts, having the treasury management systems and tools inside of your company that are able to secure liquidity. And so whilst we focused a lot on the technology side, I think actually on the international payments side, I mean, certainly at a large volume level, it's primarily not a tech issue.
No. I sense, quite a bit of frustration. Is there light at the end of the tunnel? There's got to be some trends that we're seeing that, that we can sort of look at and as role models. Yeah,
I think Kush was right about the way that regulators looked at the market, but I think that is starting to change, and there are definitely regulators in countries now that are taking a very proactive view, that are engaging with the fintech community, that are engaging with the payments community, that are trying to find out the things they don't know, and figure out how do they build an infrastructure that will enable the kind of growth that the populations are starting to demand as required. And so I think really it's about, people are still catching up. And for all of us in this industry, we feel like fintech is at the forefront of all things and that everyone knows about it. But the reality of it is that, your average person isn't that engaged in what is actually happening behind the scenes. As long as I can, get my iPhone out, click a couple buttons and send it for a relatively decent rate and not be inconvenient, I'm pretty much happy. And so, all those things will start to progress and push. And I think then we'll start to see some real progression in the space.
Yeah, I think as soon as you involve regulators and B, politicians, you realize that change comes in incrementally small bits, and therefore trying to advance that ball takes a lot longer than you had originally set out for. And as much as we can sit in the room and brainstorm and put together an identikit version of what we think a global payments UX should look like, there's obviously regionalization issues, there's investment issues, and there's obviously the regulatory side of things as well. There's also a generational thing. The average bank user or bank app user, however you want to put it, is a lot younger than the average finance director or CFO. So if we're looking at the adoption of these technologies, the adoption of these ways of doing things, which we think is second nature, it takes a lot longer for that to reach into those business communities. Where does that come from? It probably comes from as much as advertising ourselves and marketing ourselves as the banks maybe not doing as well as we could, and obviously politicians also pushing people for new and exciting ways of doing things. But this is not a 5-year thing. We're not in this for 5 years. We're in this for 15 or 20. Yeah. And that's when hopefully we'll reach that, that critical mass.
Yeah, this is fintech's still in its infancy. We've got a long way to go yet. We're talking a lot about regulation. It's a big area, in the international movement of money. Would one of you like to paint a picture of some of the key barriers to success? Maybe, talking about, the issues with KYC or other things that you want to bring to the table.
Yeah, I mean, if I can just really quickly.
Oh, sorry.
No, yes. It's okay. Look, what my two colleagues are saying is, look, when you look into the future, there's two major payment movements, right? The first is probably the wallet system. That wallet system is essentially e-money. It's money that's been taken out of circulation. It's been put into some kind of custody account, usually at some major bank, right? And then it's circulated within an ecosystem. To date, we really haven't had an international ecosystem where that money can circulate, but it's not that far away, right? And the question then becomes, what are regulators going to do around that? So one of the challenges that I've had in the past is, when we look at a wallet system for global payments related to the movement of supply chains, I've actually leveraged out to both of these, both of my colleagues or the companies that, or their representatives at their companies, and they weren't able to, and not in a bad way, but they weren't able to service this because, and it comes back to regulation, right? And it comes back to one of the things that Angela asked about, which is, what are the KYC protocols? What are the various due diligence protocols, AML, what have you? I mean, if you're working with SMEs as we do, I mean, large corporates, not too difficult of a challenge. When you start working with SMEs, I mean, it becomes really difficult accessing data to make sure that you actually have, one, that the KYC information you've captured is actually legitimate, right? So you've verified against some kind of government or your trusted database, and then you've run some KYC or AML framework around it that ensures that, that they're not involved in some kind of malicious activity. So, to be able to do that on a global scale around the world for small companies, it's not an easy task. That's the first thing. The other wave that's coming in, which I think the previous panel talked about, which was blockchain, but they're not separate issues. They're the same issue. Whether you're talking about e-money or you're talking about blockchain, that's e-money, right? It literally is the same exact thing. It's just two different technologies. And as Valli said, this is not a technology issue. It is absolutely a regulatory issue.
Sorry about knocking you back there.
No, it's okay. I mean, look, as an entrepreneur, you have to figure out the.
I think it's a really valid point, actually, and I think I'd actually add a layer to it in that sometimes we'll have prospects or people who are trying to do business with us who are fully compliant and and have huge access to their data. But they might work from an industry that carries a stigma of new technology and that our partners don't want to engage with. And so we are not only kind of held by the regulatory environment globally, but also our individual partners where we use to disperse money locally. So it becomes a very challenging prospect for businesses like yours. And sometimes when all of that stuff has lined up itself perfectly, it just comes down to the risk appetite of a specific partner in a specific country that can put up the barrier.
Well, we've got 195, 196 countries around the world. It's obviously a tall order to get them all to collaborate. But what would you like to see the regulators do to make the landscape easier? And you're the one that's feeling the pain here, so I'd like to direct that question to you first, Kush.
All right. So one of the good things that the FCA is doing, rather than bashing the regulator, right? The regulators are doing things right.
They're not here. You can do it. It's fine. Huh? They're not here.
They're not here, unfortunately. Yeah. So yeah. No, but the FCA, they are going out making cooperative agreements. I think they have like 13 or 14 cooperative agreements around the world, whereby if you have a regulatory license here in the UK, then you can go out to places like Singapore, Japan, Canada, Australia, various other places, and not really rubber stamp it, but at least fast track your applications in those countries, right? Which then makes it easier to provide the services that you want to provide. That said, for a company that runs on fumes for the most part, it's not, this isn't cheap stuff, right? I mean, you got to figure out how to solve this, and that's why you go to bigger partners and you say, hey, can we piggyback off your regulation? The problem is that the regulator comes back and says, no, you can't piggyback off of them because of this, this, and this. And so then you're left in a whirlwind challenge as to what exactly you spend money on, where you leverage off of some bigger partners.
I think the biggest thing for us and the biggest thing for this industry will be the liberalization of payments within and without China. From an economist's point of view, Brexit takes up too much of my life and it will probably be on my tombstone, but US-China trade relations and the movement of money and how that progresses over the course of the next, not just when Donald Trump is in the Oval Office, but over the course of the next 20 years, how that changes will make either turbocharge this industry to a level that most of us weren't able to fathom 2 or 3 years ago, or could be the major hurdle for us moving forward. And that's, it's a particular element for the Chinese at the moment, is that they can snatch this off the United States, because at the moment, despite the relative changes in GDP and investments, they're pretty much on the same level.
Okay. I would, let's celebrate the regulators. We've done a lot of regulator bashing here, and I want to celebrate them now. So, there's some great examples out there of hubs and geographies that are most fintech friendly, and they're the ones in the end that are going to win out. So perhaps share some of your experiences of, the likes of the Bank of England and others that you've worked with that have particularly impressed you, because our audience here will be looking to those geographies first.
Yeah, I think the Bank of England's a decent example, actually.
Yeah.
We've been engaged with them and the FCA, HMT, and trying to it really strikes me as genuinely trying to broaden their view of the way that payments are structured internationally. Obviously, these are small steps, but the right steps to be taken. They've got sometimes some of these task force are as much about publicity as they are about anything, but I do think that there is a genuine view, certainly in the UK, to try and take advantage of the opportunities that will come with the first countries to engage on this side. The whole concept of crypto and how that functions and how it can be regulated, I think, we certainly look at it as a position that would require either a central government backing the crypto itself and creating a fiat crypto-esque or at least a tier 1 financial institution. And in doing so, that would give huge opportunity for the countries that could topple that. But I don't think anyone's, anywhere near kind of pushing that kind of agenda forward right now.
I don't think it's a coincidence that the regulators who are doing the most around this come from countries their economies have been built on international trade. So you look at the UK, you look at Holland, you look at Singapore, for example. Their life depends on trading internationally, and if this is the new way of trading internationally and paying for those goods, then they have to be in the forefront of it.
So a few closing remarks here. So the technology's there, but the regulators are not moving at the same pace. The regulators need to have more of a vision and look 10 years down the road. Money is at the core of every business transaction, and it's going to give us greater GDP growth. So really, the plea to the regulators is that they have to act faster. Thank you, everybody. Sorry I didn't have any chance to ask questions, but the session's finished now, so thank you.
Thank you very much. Thank you.